Welcome to another episode of From No Crypto to No Crypto. This is the Crypto Coach, Blockchain Wayne, with another cryptocurrency podcast. Today's episode brought to us by Concierge Club, mobile private key wallet, and point of sale solution, helping to make crypto safe, easy, and overall process more efficient while costing less, helping to take crypto mainstream. Today's episode is also brought to us by the Crypto Current Conference, going to be held in New Orleans in 2020. Stay tuned, more details to come on that. All right, so this episode we want to really take a look at what is technical analysis. Now, this is something that so many people, especially in the cryptocurrency space, misunderstand as far as what is the purpose and what are the results you're supposed to get from technical analysis. So before we jump into some topics I really want to touch on that I've been seeing when it comes to technical analysis in the cryptocurrency space, when it comes to whether it's day trading, trend trading, whatever your trading style is, we're going to dig into that. But what is technical analysis? So looking at the definition given by Investopedia, technical analysis is trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistical trends gathered from trading activities, such as price, movement, and volume. Unlike fundamental analysis, which attempts to evaluate a security's intrinsic value, technical analysis focuses on patterns of price movement, trading signals, and various other analytical charting tools to evaluate a security's strength or weakness. So what does that really mean, right? We see so many people, especially on social media. Now, this is one thing I'll go out, especially in the crypto groups. Somebody in social media, say in a Facebook group, will post a chart, and they'll have put their indicators and tools that they've done, and so many people will blast them, whether telling them they're wrong, their chart's wrong, or even going back to it after the fact, saying that it didn't happen exactly like they said it would. And the whole point of technical analysis, it's not about guarantees, right? It is about the probability that something might happen. So by looking at historical trends and data and understanding past movements may help you better analyze and better predict what may happen. But the whole goal, nobody that does technical analysis is going to be 100% right every time. Right? And we live in a world where on social media, that one time that you're wrong out of 10, they'll blast you for being wrong. And this is where, if you're going to do technical analysis and if you're going to share your thoughts and your theories, be prepared for the skepticism, the haters. It's just part of, where we are, right? Some people in society, maybe, they have so much wrong with themselves that they can't help but to make themselves feel better by pointing out issues with where they think other people may be wrong. So that's just a little bit about, human behavior. But let's talk about technical analysis a little more. So starting with it, if you're not sure what I'm talking about, or maybe you've heard it, or maybe you've seen the charts and not sure where to go, technical analysis, best place to start is go to tradingview.com. Tradingview.com is a website that allows you can create a free account. There's no need. Now, they offer a paid version, which if you're doing a lot of trading, it may be worth it. But honestly, most people can get away with the free version. So create an account on tradingview.com and start looking at what you want to do. Now, the cool thing about TradingView, it allows you to pull up, charting from not just, this podcast is dedicated to cryptocurrency, but not just cryptocurrency, right? You can see all the different cryptocurrency pairings that are out there, the trading pairs that are available. You can look up stocks, you can look up forex currencies, you can look commodities like gold and silver, right? You can pull up the charting and see price history and all of that. But also when you do, say I want to see what Bitcoin is doing. So I type in BTC USD. All that means is I want to look at the Bitcoin to USD trading pair. And from there, it will actually show me, basically historical movements, but also I can see what's called top authors. Now, authors are people that post charts, and typically the ones that are followed the most have a little bit more legitimacy to what they're doing. And what's cool about that, this is where I started early on, was I would go to different charts and people that had a lot of followers and just really look at their reasoning, not just, okay, they threw this line on the chart or they threw different indicators on the chart and said this, or this could happen, but I also looked at their reasoning why, right? And that's going to help you over time, because the more chances, the better you have of identifying trends and being able to trade with a trend, it takes away the gambling feel of trading. Because honestly, if you pull that out and you're not using any kind of indicators, or you're not using any kind of market news, or it could be fundamental stuff, but if you're not using any of that when it comes to crypto trading, you're really just guessing. So it doesn't matter if you're right 9 times out of 10, you have no strategy, and eventually it's going to get you wrecked. So what you want to do is really understand technical analysis. This is one of the biggest things. So I want to go over some misconceptions about technical analysis. First and foremost, people think that technical analysis can provide accurate price predictions. That is far, far from the truth. If anything, it's to paint the scenario that based on what we're seeing, this potential range could happen. But also, most technical analysis, those that are really good at doing technical analysis, will tell you they will also have a but section where, and that's usually where they may say, we expect based on this trend to hit, within this range. Say maybe they're predicting the price go up within this range and this range, but if it goes down, this is where I'm putting my stop loss, because this is what I'm willing to lose if I'm wrong. And people will either look at a chart and maybe they'll give a range of, say for instance, Bitcoin's at 10,500 right now, and they say based on what we're seeing, it could go to between 11,000 and 11,200. Well, what some people do is they only hear 11,200, right? So they hear that and they ignore the fact that it's within that range from 11 to 11,002, right? And then say it breaches 11,000, never gets to 11,200, and then the next drop happens. And people are stuck holding the bag because they were trading with that intention of going there, rather than utilizing other tools, starting to take profit when it hits that range, slowly taking profit, being okay that if you don't take all the profit, that's fine, but then preparing for that. Or they don't set a stop loss, and the market just moves the complete opposite way, and instead of being down, only losing what would have happened in the stop loss that was recommended, people lose a lot more. So now in that scenario, the biggest underlying factor is you're relying all your decisions based off of someone else's opinion and not what you've learned, not your opinion and what you formed, and so you're not really taking responsibility for what you're doing, and that's really part of it. So there's nothing wrong with following people's charts and even in the beginning trading off of it, but just know that there's some risk coming to it. And you can't really get upset when it's wrong, because nobody knows the future. If we all knew exactly where Bitcoin was going today, tomorrow, the next day, there'd be a lot of wealthy people. But then again, nobody would be trading it, because whenever you win a trade, there's got to be a loser, right? Whenever you buy, there has to be a seller, and whenever you sell, there has to be a buyer. So we think early on, especially this is funny, we talk about people in the markets will make fun of people that bought at the top of the market, all right? But hey, we need those people, right? Now, if you're one of those that bought at the top of the market, then up your skill. That way, markets have cycles. There's always another trade. There's always another opportunity to make money. So just make sure you're not on the losing side of that trade more often than not, right? So back to what I was talking about, kind of got a little bit off topic, but many people that are new to looking at charts or seeing people post charts, they expect recommendations from technical analysis to be 100% accurate, right? It's never going to be 100% accurate. There's always going to be variations, and it's always going to be within a range, and that's really just based off of historical data. So it's never going to be 100%. Another thing that people think is technical analysis is quick and easy. So the problem is people will subscribe to these signal services, and I've yet to see a signal service that's really 100% good. Only my biggest problem with signal services, and I've subscribed to different ones in the past, they don't really teach you anything about the signal service. Now, I say that, I've seen a couple that really do go into detail, but it takes some time, one, to understand what technical analysis is, but then two, it takes a little bit more time to be able to implement that into your trading strategy. Everything sounds good on paper, and we can make all these decisions looking at a chart. When it comes time to playing with real money, whether you're trading cryptocurrency or other commodities, that's when it really determines. I've seen so many people go against their strategy because they've because they're letting their emotions take over when they're dealing with real money versus when they were just playing around with paper trading, or whatever the case may be, or just trading with a few dollars and then going up to hundreds. The risk and reward typically changes there. So people let their emotions get the best of them. So it's not as easy as it sounds. It does take some time to learn how to do charts, to learn where to put charts. But there's a lot of good resources out there that don't really cost you anything. And a lot of it, like I said, is hidden in those cryptocurrency charts that are on TradingView with authors. If you really look at some different charts of the top authors, one of the ones I've been following lately is actually a friend that 6 months ago didn't know anything about technical analysis, but decided to take the time to learn. And as he learned, and he wasn't afraid to put himself out there. So many people are afraid of posting their charts because they can get so much criticism. And this guy, a guy by the name of Tim Pace, created a chart, creates a chart multiple times a day, and shares not only what he sees on the chart, but he goes into explanations as to why. And that's the type of things I love to see, because it's not only saying, people can't just go and say, oh, let me just see what this says. It's basically giving you a chart, painting a scenario that could happen. If this happens, this could happen. But if not, I'm prepared for this. And it's really clear cut. It's no specific prediction, but people can understand what they're looking at in a chart and how to make those decisions. Another misconception about technical analysis that I've seen quite a bit of ready-made technical analysis software out there that can help you make easy money. It's not the case. It's not going to happen. It's just, I've yet to see anything that's really legit. I've seen programs come and go, and most of them don't last because there's no easy button to this. You've got to learn. The easy button is to learn it, understand it, and then to start trading with it, because it's a whole nother ballgame when your emotions are involved, when you're playing with money. Another thing I've seen is people will look at technical indicators that may be used in the stock market or in the futures market and try to apply them to cryptocurrency. Now, there's some indicators that are universal, but they can't be applied across all markets, right? We're dealing with cryptocurrency. It's a lot more volatile than the stock market. It's a lot more volatile than, say, looking at gold charts, right? So you can't really compare the two. And I see this all the time lately. People are trying to compare the gold chart to the Bitcoin chart. And there may be some similarities there, but, let's face it, it's very volatile in crypto. I predict, and my feeling alone, no technical analysis, but just looking at the fundamentals of where we're going with cryptocurrency, I see Bitcoin being worth way more than it is today in the future. But that doesn't mean tomorrow we could go from 10,000 to 4,000 before we go to that new all-time high or to the moon, like many people talk about, right? There's a lot of things that can happen. So a lot of technical indicators and historical charts that we could look at from other commodities cannot really apply when we're looking at Bitcoin or any other cryptocurrency chart. So that's another misconception. Another misconception, people think that technical analysis is only used for day trading, and it's not, right? Technical analysis, the time frame that you set. So when you set up a chart on TradingView, you're going to have candles on there. So when you go there, there's each candle represents a time frame that's at the top of the chart. So when you go in the interactive chart, say you see 1 minute, that basically means every candle is 1 minute. Now, 1 minute charts and smaller time frames are definitely used for day trading, but longer time frames, if you want to look at just a long-term overall trend, you could pull the 1 day chart or 1 week chart. Typically 1 day I find is better, but either 1 day chart or a 4-hour chart, which basically means every candle is 1 day if you're on the 1 day chart, and every candle is 4 hours. So you can see trends, you can see shifts that happen, and look at some of the other indicators that also may have indicated that was happening. If you want to understand where we're going in the future, look at historical performance just to see when this happened. Most of the time, what happened after that. So some of the indicators I like to put on a chart just from a beginner standpoint. Say you're a beginner and you create an account on TradingView and you go to a chart, the Bitcoin USD chart, and you want to see a couple of different indicators just to identify trends. I would recommend selecting the RSI, which is your relative strength index. I'm not going to go too much into what they are now. Just understand what RSI is. And then I would put MACD, which is moving average, convergence, divergence. And you can see crossings that will happen there based on those time frames. Whenever the two moving averages converge and diverge, that's when you see the market movement happen. So being able to identify that on a larger trend, you may not be ready to day trade where you're making multiple trades a day, scalping profits. But hey, if I see this major trend in Bitcoin shift from bullish to bearish, then I know maybe I should sell my position and wait for it to go down and then try to buy it back. I can either pull out a profit or I can increase my holdings of what I have in Bitcoin or whatever else you're trading, right? So it's not just for day trading, not just for short term. It can be for long term trading. It just depends on which. Now, if I'm only trading the long term trends, I don't care what the 1 minute or 5 minute candle is doing. Now, on the other hand, if I'm trading day trading, I'm still going to look at the longer term trends just to figure out, okay, what's the general direction the market is still considered to be moving in, and where are we at in that movement. But then I'm going to look down at the 5 minute, the 1 minute, and some people like myself recently have just gotten into really using the 10-second chart just for those quick scalp trades, just to see what's happening. And so there you go. So another misconception about technical analysis is that only individual traders use it, right? I hear this all the time. Whales don't care about technical analysis. And let's face it, there's not many real whales in crypto. There's a lot of people that are holding a lot, but I doubt there's a lot of people that are trading with a lot. What is happening is a lot of people are following trends, following technical analysis, and some of the big trades you may see happening or movements you may see happening are typically happening within maybe by exchanges or large entities just moving crypto. But there's a lot of commercial traders, commercial institutions that utilize technical analysis as well. The more people utilize technical analysis in those indicators, here's the funny part, then the more accurate it has a chance to be. Because if everybody's trading on similar technicals and similar indicators, then you got more of a chance of the market moving that way. Because as a trader, I don't care if the market goes up or down. I'm just looking to make sure my entry and exit points are correct, right? So if a lot of us have identified the same exit point, then a lot of us are going to sell at that point, which could then in turn cause, maybe the market was already moving down, and then typically that big sell action causes the market to drop quite a bit more. And then we've got an entry point where we're going to enter back in after it drops, right? And then within that range, a lot of people enter back in with buy orders, and that's when you see the market bounce. It stops dropping and it bounces back up. So the more people understand technical analysis and utilize it may sound silly, but the more chance you have of it being accurate in the future, right? Another misconception about technical analysis is it has a low success rate. It actually doesn't, but like I said before, so many people are looking for that magic ball prediction of exactly where the price is going to go, what time frame is it going to go there, and nobody really knows that. And anybody that you're following that says they know that, they're calling for a specific price at this specific date or whatever, I would be leery of those because they probably don't, they're probably just trying to get followers or trying to get subscribers, and really they don't really know what's going to happen. Another misconception with technical analysis is that your winning rate in technical analysis should always be higher, right? If you trade 9 out of 10 trades and you win, and I win 1 out of 10, that doesn't mean you traded better than me. Because what if those 9 trades that you won, you only say those 9 trades you won, you made $100, and that one trade you lost 1,000. It's all about your risk and reward ratio. Based on, I don't have a cookie cutter approach to trading, and neither should you. Once you get into day trading, it's really, if the risk and reward ratio is a lot higher, a lot of times you'll jump into a trade and risk more. Whereas other times it may seem uncertain. Well, maybe I shouldn't take this trade. Let me just risk a little bit. So I'm going to go with a smaller entry into that trade. So the winning ratio is not the only thing that's important when it comes to using technical analysis and trading. It's also about your risk to reward ratio. How much are you risking on every trade, and what's the reward based on that, right? And that's typically what happens. Look, when the market's rising pretty fast, I feel more confident in the movement. I'm going to risk a little bit more versus when the market's moving sideways. There's a lot of uncertainty where we could break up or break down. I'm going to enter trades with less because I know a movement in the opposite direction could really, slow things down. And when we're getting to the top and bottom of call it support or resistance lines, which is another thing you should learn how to identify when it comes to looking at charts and looking at technical analysis. But when I look at different support and resistance lines, as we get closer to those, that also dictates how I'm going to trade. I'm not going to be as risky with the trade as close to a support or resistance line as it would be maybe when, say, we fell through support and now we're falling down to the next support level. Then I may trade a little differently than if we're right on that support line. So just kind of an idea what happens with technical analysis. So the biggest thing out of this, guys, if you're going to follow someone on TradingView, I mentioned earlier Tim Pace. So Tim Pace is Heisenberg BTC on TradingView. Heisenberg, I guess it's Heisenberg from Breaking Bad. Heisenberg BTC. And that's one that I would recommend you follow, just to not only because, hey, he's going to tell you what to do. No, he's not. He actually ends every TA session with WTF DIK. And that's just an acronym. You can figure out what that means, but it basically means he doesn't really know exactly what's going to happen, but this is what the chart is telling us, and that just allows you to make better decisions. So quit being that guy or that lady that sees someone on Facebook share a chart, and this is what they're predicting could potentially happen, and we call them out because they're wrong, or maybe a week later we come back to it and blast them for not being right. That's not the point of technical analysis. It's really just to have a better idea, and it takes away, it's less like gambling and more like, having educated guesses as far as what's going to happen next. So technical analysis, it's important. If you're brand new to crypto or you're listening to this episode and you're like, I still have no idea what you're talking about, don't worry about it. You're not quite there yet. Just you've done the right thing, plugging in, getting educated, and listening to what's going on in the space. But over time, that was me. That was me several years ago. And then always focus on increasing your education, right? And I've learned from following people, like I mentioned, say on TradingView, that there's some people you learn to listen to, and there's other people you don't. Just look at the history, right? Look at the history as you follow them. Is their history spot on, or is it not? Are they calling for an accurate for a specific price? Then chances are they probably don't know what they're talking about. Or are they saying different movements? And they're painting a scenario what could happen either way. Like, based on what I see, I think the market could go up. But if it doesn't, this is where I'm setting my stop loss to mitigate risk. So, again, I want to thank you for listening on this episode. And we will catch you on the next episode.